Hi there, welcome to Nepi Invest. Some storm clouds here in Brisbane as I speak, and some storm clouds for Altura Mining shareholders as the company announced towards the end of 26th of October on Monday that they've gone into administration. So I've been in this experience before, so there's a lot of many scenarios that can play out. So in my experience, the company I owned, I think it was called Titan Energy. They're into drilling. This was about 6 or 7 years ago. They went to administration, even though they're growing very strong. Unfortunately, they decided to enter the market when the buying boom had finished. They went to administration, and about a year later, they came out as a Chinese Daegu company called AU Make. So that could happen. Many different scenarios can play out here. So Altura Mining, I did become interested in this company about in June or July this year. I'll go into reasons why I became interested, and then the main reason why I lost interest. And there are some lessons to learn from this instance, and I'll talk about that too. So let's get into why I actually initially became interested in Altura Mining. So my interest was piqued because this very long-term downtrend from 2018 or start of 2018 all the way to June or July 2020 seemed like it was going to be broken. So if you go back to 2017, towards the end of that year, in 2018, share price got to around 50 cents. So this was sort of the top of the mining or the lithium sort of bubble, definitely a bubble. And then because that bubble burst, the long-term downtrend had formed where the share price went to about 40 cents all the way to 5 cents recently. But there was signs in June, July that the long-term downtrend had broken. So let's have a look at that. So this is just the daily chart over the past year or so. The one thing I did notice, the main thing I noticed from this chart was the long period of no trading between January and March. So there's something happened in that. So I want to know what happened there. But the market became interested in Altura Mining around June or so. We can see the moving averages, or the share price started to go above the moving averages. The moving averages started to turn. We saw 7 cents was a bit of a resistance line, and right on the last day of trading before they went into a trading hold, share price really wanted to burst through that resistance of 7 cents. So whenever I see this, some traders, some technical analysis won't even care about the finances of a company, won't even know what a company does. They just look at the chart, and based off the chart, they'll buy or sell. But I'm interested in what a company does, their finances mainly. So I decided to have a look at the cash flow report on the 30th of April. And there was two main things that really interested me here, not on the good side, on the bad side. The two big crosses against Altura Mining. So the first one was they were cash flow negative to the tune of $11.3 million in a quarter, and in 9 months they burned cash to the tune of $45 million. That's not a good thing, even though they were in production. So this was a company that was in production of lithium. But the big thing that really got me not interested, but that turned me off Altura, was its interest paid over the 9 months of $15.9 million, which suggested to me, just looking at that, they had a loan, a fairly significant loan, and even if it wasn't fairly significant, the interest on that loan was quite high. So then I went to the half-year accounts on 6th of March just to have a look to see what was showing on these accounts. A little bit of a tick there. They were, revenue was 55 million, cost of sales was 53.9. So slightly positive, a slight tick, we'll say. So they did have a bit of revenue. But again, that big interest payment of $16.1 million was a massive cross, because that did mean that contributed to their losses in that half year. So I want to dig a little bit deeper, go to the balance sheet just to see what their loans was. So I went straight to the current liabilities and non-current liabilities, and there you have it. In the current liabilities, they had borrowings of $190 million. So that's seemed fairly high for a company like this. It's not something I really want to see. I'm not a big fan of debt, so there's going to be a lot of people out there, a lot of analysts, fund managers, people saying you don't have to worry about his debt as much now because debt is low interest. It's not always the case. Debt can be still a company destroyer. And right next to that debt, you can see note there, or circled there, 4. So I went to note 4 to have a look at more information on this borrowings. And you can see it was a loan note facility to the tune of $109 million. But the thing that turned me off, full stop, with this company was this sentence. I've just got it circled with red. The group breached financial covenants for each quarter during the 2019 financial year, December 2019 half year. That did not read at all well for me, and that put a stop to my interest in this company. So even though I was interested in the potential uptrend or new uptrend of the company, I just went, nah, this is not worth the risk. So I'll just find another company to maybe buy. Now, they did release another cash flow report on the 31st of July, and I did have a look at this. I was still a little bit interested in the company, and it was a little bit more bullish. So receipts from customers, 31.3 million, and they were cash flow positive in operations to the tune of 2.6 million. So actually a little bit more positive news there. So I thought, oh, maybe they can turn this around. So in their corporate outlook, they did mention they were engaged with several parties to pursue options to strengthen their balance sheet and take advantage of the improving fundamentals of lithium and the EV market. Now, to be honest here, I'm not the biggest fan of lithium. I think if you want to get into the EV market, I think nickel would be a better player because lithium is extremely abundant and there's going to be a lot of miners mining lithium. And when you have abundance of a supply of metal or an element, many players can come into the market fairly quickly. And you've seen that with lithium over the past few years, or past 5 years or so. So I wasn't completely convinced that's the end, not the end, but completely convinced that Altura wasn't a possible buy in the future. But 10 days after this announcement, they went to a trading halt. The trading halt it was in regards to their arrangements with their lenders, and this was the last day, or the 9th of August was the last day they were traded. They went to a voluntary suspension 8 days later, which is not the best of sign, but maybe they were starting to work things out with their lenders. They did an update about their loan note facility on the 25th of August, and then over a 2-month period, nothing much really happened. Unfortunately for shareholders, because once you're in a trading halt, you can't trade the shares. And then on the 26th of October, they announced they've gone into receivership. So they announced that Richard Tucker and John Bumbach from Cord & Menther were appointed receivers. So how the company moves forward from here is going to be dependent on what Richard Tucker and John Bumbach decide. So there's many different scenarios at play here. And yeah, so many different scenarios. That's all I'm going to say. One of the things I did look at was I went to Hot Coppers just to see what the feeling was, and a lot of negativity, a lot of bad feelings. A lot of shareholders have lost quite a bit of money around this announcement, or they more likely will lose a fair bit of money. But I found it interesting. If you go back to the 21st of August 2019, there was a user called What Is My Username who had a very negative post on Altura, and the reasonings why they sold out, and the reasoning behind their selling out was around this secured loan note facility. And they just I'll show this announcement in their quarterly cash flow report from about a year ago. There was a little bit of announcement or comments the company did make, and based off this announcement, this shareholder did sell out. What was interesting for me was quite a few comments after this from shareholders, very laying into this shareholder or this ex-shareholder, telling him was wrong, is that's that sort of thing, off the mark. But I find it very useful to find contrarian thoughts or contrarian opinions around what you think, because you can get a sort of a different opinion to what you think. So this was a very a very poignant comment from What Is My Username, because they became bearish. They were bullish. They were a shareholder. They became bearish because of this very thing that this company found it difficult to get over. So this hump, I think you could call it, this senior secured loan note was a hump. This shareholder found this, this is going to be a difficult thing for this company to get over, and they sold because of this. So I think it's very good to see what the contrarian opinions are, and to maybe not follow those contrarian opinions, but just to seek out contrarian opinions, to seek out the risks that you maybe not have seen. And this was definitely a risk, because this post was ended up being right, because this low note may have been the end, or the cause of the end of Altura Mining. So, quite sweaty here, it's quite humid. So the future of Altura. So unfortunately, shareholders' rights always come last. Everyone else becomes before them. So it's got to be dependent on what the receivers do. They might decide they can restructure the debt, and maybe Altura will come out in the end. Maybe you might see what happened with Slater and Gordon. So Slater and Gordon, shareholders got cents on the dollar. So I forget exactly what happened, but they didn't come out very well in the end. So more than likely, no matter what happens, you won't come out very well in the end if you're a shareholder of Altura. The Altura assets might be sold, have a lot of assets. They have a working facility. So maybe Pilbara, which is, they have a facility next to Altura, maybe they can buy Altura's assets cents on the dollar. And maybe Altura will become a shell, and then they'll be backdoor listing. So maybe Altura will become a cannabis maker or something. Maybe they'll become a cybersecurity firm. Who knows? Or they may just become kaput and leave the market forever. So the main lesson, I think, to take away from this is that debt can be debilitating, and it can become a company destroyer. It's always good to look at the debt a company has on its book, to look at how much interest they're paying, when it's due. So the fact that this company had $200 million in debt, and this is their comment or their section they had a year ago in one of their quarterly cash flow reports. So the interest they were paying on this debt was 14 to 15% per annum. That's a lot of money, a lot of interest they have to pay. So unless they become cash flow positive in operations, and the fact that they are a mining company and they are a price taker, they can't control how much money they get from their product they sell, is not a good thing. So the main lesson to take from this is always have a look at debt, because it can destroy a company. So that's all I got on this company, on this video on Altura Mining going towards administration. I think it's very good to take some lessons from these sort of situations. If you are a shareholder, unfortunately, I do feel for you, because I've been in this situation before. And again, I'm not a professional advisor, so if you do need professional advice, make sure you seek out a professional. So good luck to all those Altura Mining shareholders. I hope something good does come out of this in the long term. I hope Altura Mining can get something out of this. So maybe the receivers do find a way through this. Otherwise, have a good day. I'll speak to you soon in another video. See ya.